Alright guys, welcome to video 10. In this video we're going to continue the candlestick theme that we've been going with in the last two videos, and now we're going to learn how to apply them to actual charts, and we're going to start forming our overall trade plan for getting in the market and starting to take trades, because obviously that's our end goal, is to eventually start using these tools to take trades and make a little money. So let's talk about how we're going to apply these candlestick patterns and then the new way that we've learned to look at candlesticks to our two main types of basically our two main types of market structure. The first is going to be our just flat horizontal institutional levels, and those are going to be our major levels of support, our major levels of resistance, and our ranges. Okay, so we're going to be looking at those in both trending and consolidating markets. And then in our next video, we're going to talk about using them in our channels with our trend lines, and as we look to trap price. Okay, so we'll really kind of bring this all full circle, and then later on we'll talk about some more advanced modules. We'll start talking about the actual timing. We'll talk a little bit about buyers and sellers, and we'll go a little bit deeper into that. But right now let's just look at what are we going to look for basically from candles as they react to these levels or to these trend lines. So first thing that we want to do is we want to identify the major player. Right? We've talked about this before. We want to make sure that we're with the overall trend, not just the trend that's on our time frame, because we don't know if that's the overall trend. We just know that's the current trend for that time. We want to identify the major player and the overall trend, and then we want to be on that side of the market. Otherwise, we're taking counter trend trades, and you can do that, but let me tell you something that may or may not change your mind about taking counter trends. I know a lot of traders have the mentality that they need to get every pip. They want to get price coming and going. And I don't know if this might be an aha moment for you, but trading is a numbers game. It's a percentages game. If anyone's ever listened to the audio book, which I have in our file section, Trading in the Zone, he talks about how being a forex trader is like running a casino. Casinos lose all the time, but they have about a 5% edge over the players, and that 5% edge is enough to where if you play enough hands, you will eventually whittle away your bank account and go broke, and the casino will take all of your money. Trading is very similar. We want to trade with as much of an edge as possible. And everything that we do, technical analysis, marking our levels, looking for our trends, identifying our major player, all of these things give us a little more of an edge before we take a trade. And in the long term, okay, over years of trades, I know some of you aren't even a year into trading, that's fine, but if you plan to stick with trading, you will eventually accumulate years worth of trades. And do you want those percentage-wise to be overall winners, or do you want them to be overall losers? I mean, obviously everyone's going to answer, I want them to be overall winners. That's the whole point, that nobody wants to be a loser. So why then do you want to try and risk your edge by trying to grab extra pips in a counter trend? Okay, you may be successful, but understand that the probabilities are low, and you're going to take more losses that way than you're going to if you were to be patient, if you were to trade with the overall trend. Okay, does that make sense? So if you were to think about it as like think of like a batting average, I guess, or anything that deals with percentages. Sports statistics are always great for that. But if you're focused, and let's say you take 10 trades in the course of a month, right? You have 10 trades. If you chose to trade all of those with the overall trend and have the best, highest probability trades possible, you could probably pull off, let's say, just hypothetically, 70% win rate, right? Which is great because you win 7 out of 10, and with proper risk to reward, you should be very, very happy with the growth of your account. Now, let's say you decided that half of those you just really wanted to grab those extra pips, and you decided to go counter trend. And we all know that counter trend usually doesn't pay out. It pays out probably half as much as a good strong trending trade, because counter trends are very short. They don't last for a long time unless you're doing them on like the daily time frame. So let's say you decide to do half of those trades counter trend. What do you think is going to happen to your winning percentage? It's going to go down no matter what. It's absolutely going to go down. Even if it goes down to 60%. Let's say you only won 6 out of 10 trades, but a couple of those trades you only also made half as much as you would have if you would have done a trending trade. Do you see where I'm going with this? I don't want to preach to you all day long, but I just want you to think about that because we're going to be going into the next module, and that's where we're going to start talking about risk to reward. We're going to be putting together your personal trade plan, not my trade plan. This is going to be your trade plan that's founded in these ideas. These ideas are its foundation, but you're going to be adding all the little tweaks that make it personally your own, that make it absolutely custom fitted to your trading style. I would never ask anyone to trade exactly the way that I trade, because trading is a very personal endeavor. It's not a team sport. Okay, it's an individual sport. So keeping that in mind, first thing we want to do is identify the major player. Okay, and to do that, we need to level up. We need to look at the time frame above us that's above our trading time frame. Okay, if I haven't mentioned that before, the TTF is our trading time frame. That's the time frame that we look to take a trade. So if I'm on the 1 hour, okay, my major player is going to be on the 4 hour. I think we talked about that in the last video. So that's going to be number 1. Number 2 is you need to look for exhaustion candles in that world above us. So we talked about that definitely in the last video, to where if we take 4 1-hour candles and we put them together and look at them on the 4 hour, are they really telling us the same story that our 1-hour candle is? And we might be getting a real nice long wick and maybe a shooting star on the 1 hour, but if we jump up to the 4 hour and take a look at it, is it still telling us that we're good for a sell? Or was that just a little bit of a pullback and it's still an overall buyer's candle? Okay, do you understand what I'm saying? So we need to look at that. We need to get a little bit of perspective, a little bit of top-down analysis before we jump in that trade. Now 3, we need to verify that either buyers or sellers are in the market. How do we do that? We need to make sure that we have a candle that's closing with price either above for a buy or below for a sell the most recent controlling candle, or the most recent candle of either a buyer or a seller, that gives us the green light that, okay, now we have either buyers or sellers back into the market, even if it's only for a very short time, but now is the good time to jump in because we're going to get a little bit of a push in our direction, and we'll start off this trade in profit, hopefully, and then go from there, because it's so much less stress when you start a trade and it goes into your favor like a good 10 or 15 pips right off the bat, and then you can kind of relax a little bit, because when it goes directly against you, which I know a lot of people have that. I know there's a lot of people that feel like they have, the demon's touch or something, to where they're like, every time I enter a trade, it just goes right against me almost instantly. I should just bet against myself and I'd probably be a millionaire. But don't feel bad. Hey, everybody's gone through that phase. It's just a matter of, we need to identify if either buyers or sellers are in the market first, okay, and then we want to get in. So that being said, let's take a look at the charts, because it's really the only way that we're going to be able to take a look at it. Okay, This is a great example. Euro USD, this is a trade that we are currently in right now, and it's a great example of why we took this trade, because it's based on all of these rules. This is a textbook break and retest trade. So we have our major support level here, resistance, sorry, it started out as support, okay? And we had a false break. Let me get my pen out. Okay. So we had this false break here, came up, retested, up, came down, almost another false break, but then bam, smashed through that, just smashed through that. And so now we were waiting for the retest to look for a good entry, because once it broke through that support level, which is now resistance, it's now a supply zone, we just want to see that price is going to be capable of continuing that drop, and that this here wasn't a false breakout. Okay, because that's always a possibility. It's one of the big reasons we wait for a retest, because it's validation that yes, that's what we're looking for. That's what we're looking for. So we had price kind of go sideways here, and it comes up here, and we have just really small candles, really weak, not really enough for me to want to jump in personally. Okay, and I'll show you why in a second. Then we had another drop followed by a quick push up. Okay, very rapid push up. Then we had this pin. Looks good, but we never get a close below this. Okay. Then we have price come back up, another set of pins, and then we had this sharp drop. And when we had this sharp drop, okay, that's when I wanted to jump in, and I'm going to show you why we did that. Because what's our first rule? First thing we're going to do, we want to look at, let me see here. Yep. First thing we want to do is we want to look at the world above us. Okay. So if we jump up to the 4 hour, now we're going to see the bigger picture. Okay. Now, no. Now if I bring this in, okay, you see how our major player is a seller. We're still in seller's territory. That's one of the biggest reasons why I was looking for the sell. Okay. Next reason is, and you might be asking, okay, well, why is it seller's territory? It looks like from here it's been going up. This lower low right here. The reason why is because it's never breached this high. It's never pushed above that high, and that's what we've been waiting for quite a while actually. We've been waiting to see if it's going to ever break that high. You see how it's made almost a triple top here? 1, 2, and then we had like that little bit of a false breakout here. So it has not been able to break that high. It's tried 3 times and it was never able to sustain a break above that high. Let's say that. So this entire time we've just been in nothing but seller's territory, and so that's what we've been looking for. Our strongest trades have been sells. Now, next thing we want to look at are candles above us, the macro candles, the candles in the world above. Are they telling us the same story? Now this is why I didn't enter in when we had that little, after this point right here, we had price kind of go a little bit sideways, and then this was that first retest. But it was not telling me that sellers were in the market yet. Okay? It was not telling me that. I was waiting for this 4 hour candle to close first below this point, or at least near this point, to tell me that sellers were in the market. Sorry, not that point, this point right here. Okay? Because when we look at when we look at it on the 4-hour, now it doesn't look like such a confusing mess where I'm like, is this a retest? Is this a retest? When we look at it on the 4-hour, it's extremely clear. This is the retest. Okay, this. Beautiful evening star formation. So I'm getting the same story now after those candles. Now I'm seeing the same story. I did take a little bit of an aggressive entry, but when I dropped down to the 1-hour, I was seeing that sellers were already in the market, so I went ahead and took a position. But do we see how the story now lines up on the 4-hour the same that it does the 1-hour? Now that we see sellers have come in the market, now we'll take a position and we'll see how that plays out. And then that gives us our third. We look for a close of price either above or below. And when we had this candle close below this last level, and it was actually right in line with this, it actually closed like just a pip below that last candle. That's our validation that that trade is good to go. Let's take a look at another example real quick. Okay, now this is a trade. Oh, let me drop back to the 1-hour. This is a trade that I took last month, and it was a very nice risk reward ratio. So we had price here on the get this here. We had price retesting this top of a range. Okay, so let me zoom out and I'll show you the range. The last example that we looked at was just simple support and resistance. This here is was in a bit of a consolidation range. It actually still is. It's still in this range, but I've already secured the profits on this just because it was a long trade. It was quite the swing trade. So we're here. Oh, beautiful. Nice. Okay, so we're in this range. All right. Once it broke into here, this is our range. We've got our top, our bottom, and this is where we're playing ping pong in between in this range. Okay, so when we saw this retest of that range, the top of that range, that was our entry. Now if we zoom out, the reason why we took that retest instead of down here at the bottom, first of all, that bottom hadn't been created yet. Once it created that, then we had the upper and the lower limits for our range, but also because you see, what's our major player? It's a seller. Never broke that high. Then when it came down, made a new lower high, never broke that. Now this was our new lower high. When it didn't break that, the sell was on. Okay, so we identified our major player. It's a seller, so looking for sells is the highest probability setup for this range. Now the exhaustion candles, are they the same on the lower time frame as they are on the higher time frame? Okay, so let's take a look at that entry on the 1-hour, which was my TTF. That was my trading time frame. Even though it was a 1-hour, it did turn into quite the swing trade over, I think it took about 3-4 days to finally complete. So when we had price come up, this is what we saw. Technical term for it, it's slightly bearish engulfing, or you could call it a railroad track. Not quite a tweezer top because the wicks aren't exactly of equal length, but you know, it's splitting hairs. Tweezer top, the longer bodies, for me it would be a railroad tracks, but definitely an indication of reversal. So what were those candles? Once I saw that, first thing is that price closed below here, so that indicated that sellers were, even if it's just temporarily, were in the market. And then this is what I'm talking about. It went straight down into profit, and this was 100% risk-free trade. I checked it like once every couple hours just to make sure that it hadn't shot back up into this area. Okay, but for the most part was completely risk-free. Here could have been a second entry, but it was more of I was watching it over that 4-hour period to see if it was going to break back above because it was right at my stop loss. I had my stop loss right here and it was just dancing on it. And you'll have trades like that where you're just like on the edge of your seat. It's like pins and needles because you don't know, are you going to get stopped out? Is it going to turn back in your favor? And this one did. It went down, played around for a couple days, came back up. I almost freaked out. And then look at that, just straight drop out of the sky. And once it did this drop and then formed these other railroad tracks right here, I waited for one more candle. You see how it closed? That's a little bit messy. Oh, outstanding. There we go. So once this other candle, this second candle here closed above this previous candle here, it was telling me that buyers were coming back into the market and I should just take what I've made, secure that, and be happy with it. And it was fine because it was a 3-to-1 R. Sorry, it's a 3R. Okay, when we start moving forward, we'll be referring to risk and reward in multiples of R multiples. That's how professional traders measure them. If you read Van Tharp's book, The New Market Wizards, he details that extensively, and we'll talk about that in our risk to reward video. But real traders, institutional traders, they measure the risk to reward in just multiples of R. Because you think about it, every trade is a number to 1. Like it's either 2-to-1 risk to reward, 3-to-1, 4-to-1, right? In the markets, they take all that to 1 stuff out and they just say it's 2R or 3R. Like this one was 3R. It was 3 times return to my risk. I risked 40 pips and I was looking to get 120. So that was a 3R return. I ended up with 2R, which was 80, but man, 2 times, a 2-to-1 risk to reward. 2R is a great day any day. I'll take 2-to-1 any day. Oops. So let's look at this one last thing. So how did this look on the 4-hour time frame? I've looked at the 4-hour world above and verified that the major player was a seller, so I was looking for a sell. I had my range parameters. I had my upper limit and my lower limit, and I was getting that retest. And I did get price to close below, telling me that sellers were in the market. So my last thing to do, I want to jump back up and look at these candles now after it's closed on a 4-hour time frame, and let's take a look at what that looked like. I'll show you what I saw. Look at that. There's our exhaustion candle. Perfect. I mean, it really can't get more textbook than that. Get this out of here. See that? I'll go ahead and remove this. This trade's done. But look at that. This was the close of that final 4-hour candle, and then this is the candle that I entered on because it was a railroad track. It went up and came down, and that's the wick that it left behind, and then it turned into an absolutely beautiful, beautiful evening star formation and just dropped from there. Okay, so we have our exhaustion candle. We're with our major player. We're trading off of a major level of support and resistance inside this range, and the trade, textbook, played out perfectly. Okay, so those are the types of trades that we want to be looking for, and that's the way that we want to look for our candles to set up on major levels of support and resistance or in a range. Now in the next video we'll talk about how do we use them in a trend line or a channel, or when we trap the price. Spoiler alert, it's basically going to be the exact same. I'm just going to go through some examples, and hopefully this will be opening up your eyes to, like, you know, it's really not that difficult when you just look at the market in the correct way, you know, from the correct perspective, and it all just seems to become so simple. And then it's just a matter of timing, and timing is a little more of an advanced concept, and we'll go over that in later modules. Okay, it's the one thing everybody has trouble with, but for now we just want to identify our setups, our entries, and then once we've got that, all we have to do is look for where we want to take profit at, right? Make sense? All right, guys. So for your homework, yes, engulfing candles, forgot about that. So for your homework, watch this video 5 times, and then I want you to mark up 10 charts. It doesn't all have to be on the same day. You know, you can mark up 3, watch the video again, mark up another 3, see if you missed anything. But I want you to show me 10 charts, and I know it's a little bit tricky, but it's actually going to turn out to be 20, because I want you to show me, first of all, where you would enter on either major support or resistance or inside of a range, okay? And then I also want you to show me just the chart with the world above, and I want you to identify the major player and tell me whether they're a buyer or a seller. And based on whether they're a buyer or a seller, your other chart should definitely either be a buy or a sell. Okay, does that make sense? I want you to show me that you are trading with the overall trend is what I'm trying to say. Okay, so sorry, a little bit of double homework on this module, but hey, you didn't get any homework at all on last module, so it's about a wash. You guys are good. All right, I'm going to wrap this up, and our next video, like I said, will just be going over the same thing, only using trend lines, channels, and trapping the price. And then that's going to be it for our week 3 videos. And then in week 4, we're going to start putting together our actual trade plans. I'm looking forward to that, because once we start doing that, we're going to go over risk to reward. We're going to set rules in place for you as a trader, and we're going to start actually putting those rules into practice, because the next step is demo trading. All right, so I hope you guys are getting excited. I know you guys are just chomping at the bit to put these things into action. Just give me one more week, and then we'll get started on demo trading, and then that's when things get really fun. All right, guys, I will see you in the charts, and I will see you in the next video.